Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, if I were to ask you to identify your costliest asset, what would it be? Undoubtedly, it has to be your house, and yet not many of us acknowledge, let alone make any attempt to insure our house against potential threats. The year 2014 witnessed a number of natural disasters, including the Jammu and Kashmir floods and the Hud Hud cyclone. Now, these disasters have created a certain amount of awareness amongst people to protect their hard-earned assets, including the house and its content against such calamities. Now today we are going to be discussing about home insurance in detail and try to analyze why it is a must-have policy for us. Let's welcome Yashish Dhaya, CEO and co-founder of Policy Bazaar, and Milan Naik, country head, marketing and institutional sales, Liberty Videocon General Insurance, to the show. Thanks Yashish, thanks Milan for joining us on the show. Yashish, let me begin with you. Why is home insurance so important? It's not compulsory. Not a lot of people take it. Why do you think it should be a must-have in your insurance portfolio?
I think what is insurance about? Insurance is about those events which you cannot financially handle, which make one's life so miserable that one needs to take support from the insurance pool or from somebody who can insure it. And the house is by far and away the most expensive asset we have. Now the point is, houses don't disappear every day because of floods, etc. So we, don't expect them to disappear that often. But at the same time, the cost of something like a home insurance is also quite low. And if one was to try to convince customers about why it's important, I would of course try to highlight the fact that floods happen and the house can go. But the simplest way is, a lot of us, for example, when I go to sleep every night, I do wonder if all the doors are shut, because I'm worried about theft. And the simple thing is, even theft is covered in this. So if somebody just breaks into your house and steals stuff, that is also covered. And I think that should convince people to at least sleep with peace, that if something does happen to their, we just had a neighbor getting robbed 3-4 days ago, and we hear it all the time. So at least that is an event that happens more often. And I found that consumers are more convinced when events happen more often, rather than when dramatic events happen once in a while. I think Milan will have some more stats on this, but if one was to just look at the stats of how many homes have kind of melted down because of floods or because of events of that sort, I think that number is quite scary.
Right, Milan, what's your take on this? And also, what's your perspective as far as insurance of homes is concerned from an insurer point of view?
Sure. So, Arjun, let me put it in perspective again. I think if you see the overall macro picture, the penetration of home insurance in India is about 0.65%. So, this is based on a couple of sources that we've been able to identify.
And would it be correct to say that most of those are apartment buildings?
I would say we don't have necessary data on that, but 0.65 is the penetration on an overall basis, which is still negligible.
Right.
And as you rightly mentioned, in the context of a couple of calamities that recently hit our country. Now you put this in the perspective, in the context of penetration globally. For example, in the UK it's 97%. In the US it's 96%. In Germany it's about 80%. I think people clearly recognize in the Western world the need for being insured, especially for, as you rightly said, one of your largest asset. The recent floods that happened, for example, the Mumbai floods, that happened in mid-2000, close to about 380,000 houses got impacted by virtue of that one single event. Jammu Kashmir, almost close to 2.5 lakh. So you can imagine if one single event were to happen, and if there's a concentration of household, the real impact on the individual as well as on the family. And people put their lives earning into one single asset, and if you've not covered it, it's a bit strange to sort of kind of relate in terms of given some of these situations.
Right, Yashish, you talked about household goods. So define that for us. I mean, what all is insured, what isn't?
So see, when you basically take home insurance, there are two kinds of home insurance. The first one is the building. So the structure, if that gets damaged or the house gets wiped off, earthquake, floods, etc., any kind of natural calamity, could be even a fire, right? And then comes a second type of coverage, which essentially covers what is inside the house. So this could be
So are these, just for clarification's sake, are these two different covers you have to take, or they're inbuilt into
They can be inbuilt in a single plan, or you can take one type of cover So you can take them individually, or you can take a single plan which covers both. Both options are available. Now, when you talk about contents are what's inside the house. It includes your furniture, it includes your clothes, it can include jewelry, it can include the electronic items, it includes your television, it includes your... Now, and all these things are not just covered from theft. They are also covered from things like very dramatic power outages, various sorts of potential damages are covered. Of course, they have to be restricted. So there's a simple rule, you can't have more than a certain amount of cash at home. You should not, like, yeah, I can imagine people having a lot of cash at home, but they should not be having it. Like, it's ideally supposed to be in the bank or in the locker. But whatever you're allowed to have at home, if that kind of cash disappears, or if some jewelry is there up to a certain amount, as long as you've kind of declared it, if that gets lost, then yes, or gets stolen, then yes, you would get covered for that. So I think that is what contents are. It is basically what is inside the house, and it can be everything. So it can be your computer, it can be your television, it can be your refrigerator, it can be your air conditioners, it can be, as I said, your furniture. It can even go on to being expensive paintings, vases. It can be anything.
So a lot of people, Milan, would say that it sounds pretty complicated. I mean, I'll have to give list after list as far as household goods are concerned. So how do you actually go and assess the value of household goods? And also, what do you need building permissions? Do you need, what kind of documentation do you need when you go and insure a building or an apartment complex,
so,
or an individual house?
Sure. So one is about, like Yashi mentioned, the structure, and other is the content. So on the content side, there are two ways to kind of take a policy. So one is over-the-counter OTC product, where you can, it's basically on a first loss basis. So for fire and other 13 allied perils like floods and explosion or of any kind that happens to the structure in a house. So you have a cover for that, basic cover. Then you have for furniture fixtures, you have for electronic items, you have for jewelry. And there are also sections for, say, for example, third-party liability. Right? So God forbid, like for example, when you have maidservants working in your house, and if there were to be an event and something were to happen to them, then there's a coverage offered to that for them as well. So it's quite an exhaustive cover for any possible event that could happen in the house. And so one is the OTC, where there are fixed sum insureds for each sections. The other is a declaration-led, which absolutely, I think, to me, I personally have gone into a product which is basically you have to take the effort. You have to ensure that every single asset of yours is declared to the insurance company and told to them. That gives you the
along with the bills, or just approximate?
No, you need to, of course, give them. You're going to substantiate it. You need to give the model number. So there's a fair amount of detailed exercise behind it, but it's a one-time effort. And every time that you buy an additional asset, you just inform your insurance company so that there's an incremental premium for that. But what it gives you is, complete peace of mind.
Right. Right. So what about some of the exclusions, Yashish?
So there are exclusions.
And explain to us act of God, because that seems to rankle a lot of people.
So there are exclusions in many policies around terrorist events. There are exclusions around misadventure of various sorts. So if you've had too much alcohol, you're under some influence, and you set fire to your own house, so you kind of there's some exclusions for those types of events. There are exclusions for continued absence from home. So usually there will be a 45-day, 90-day, 180-day kind of limits that you can have. For that period of time, you can be away from home, but you can't really buy it for a house where you're never there, or you're there once a year, etc. So you will have exclusions which are around constant travel, and you have to kind of check the house quite often. But those are the broad exclusions. Otherwise, bulk of it would be, there will be exclusions for cash over a certain limit. So there'll be constraints around what you can cover. However, you can go for specific declarations as well. And once you go for specific declarations, then of course most things are covered. However, if you have home insurance, one of the primary things is to keep some record of the items in your house, and list them out and have the bills, etc. Specifically, if you have some extraordinary items, so which are not normal. So insurance companies will be genuine in terms of understanding that if this is the amount of space, then this is the amount of electronic goods that should ideally have been there. But if you have something more than that, then it's much better if you have your own documentation.
Right, Milan, what about home loan insurance? I mean, would you recommend that? Are people taking it? Why is it important?
Right. So, I mean, again, 0.65% penetration, which is anyway negligible. A large part of that, to me, I think, is by virtue of what happens courtesy the banks. So, whenever they are extending a loan, a mortgage loan, or to customers, they also offer, along with that, is a home insurance, because they have an insured interest, because there's an asset that they are funding, and they want to ensure that the asset is safe. God forbid there were to be an event. So, there is clearly insurable interest over there, and they are the people who are actually driving that insurance penetration to a large extent. So to me, I think having a home insurance, there are a couple of elements that's important. One is, at a personal level, financially, you're taking a loan. So effectively, you require some sort of financial instrument that protects you for that loan.
Precisely.
The other element is the asset that you're creating. Now, how do you protect that asset? Whether it is under construction or once you sort of occupy it. Right? So I think you need both those elements, especially when you are taking a financial liability.
And we are discussing home insurance. We've got Yashish Dhaya with us. We've got Milan Nayak with us. And, Yashish, tell me what are the broad contours? What does a person need to keep in mind when they are opting for home insurance?
Okay. I think the most important thing is you first need to figure out that what are you getting covered? The building and the contents, right? When you look at building, remember, what the insurance will pay for is the reinstatement. So if you have a large plot of land and there's a building on top of it, if that building was to collapse, the land is still there.
Precisely.
So the insurance company will never pay for the land because you can reconstruct that house. So the insurance company will pay for the ability to reconstruct that house back into position. If you obviously have an apartment block, then it's more clear, because that apartment block would disappear if it was to, and it'll have to be rebuilt. I think in apartment blocks, it would be quite important to get your housing society to ensure everybody has a, because if you really think about it, if you're on the 13th floor and the guy on the 11th floor doesn't have home insurance, then how the 13th floor is going to be rebuilt is going to be a bit of a question mark. So of course there are going to be some things that can be done there, but you would not be kind of able to take very good advantage of that. So one needs to think about those matters. Of course, when you've got contents, one needs to there are classes that these contents are broken into, and I think one needs to very specifically can potentially declare each class how much they want to cover under each class and get the coverage price for that. In terms of overall pricing for this product, typically a 1 lakh rupee cover costs about 50 rupees a year. So if you have a 10 lakh cover, it'll cost 500 rupees. If you have a 1 crore cover, it'll cost about 5,000 rupees, which is roughly about 400 rupees per month. I see it very oddly. People pay that kind of money for the security guard in the compound, and a large part of that security guard's job is to make sure the thieves don't come. Some part of it, at least.
Right.
And here, if the thieves come, it's okay. If the thieves come, you're still covered. You don't have to fight with the thieves and all those things which ideally are not recommended anyway. So I think it's a decent cover to take. It's not very expensive,
and it's not tax deductible, is it? Because you
don't get any tax.
You don't get to hear about insurance, and so one thinks that you'll get a tax break on your personal income.
The tax breaks are for life insurance and health insurance.
Precisely.
The tax breaks are not for, so they're more for personal insurance. They're not for a home insurance or car insurance or any asset. So if you're covering an asset, you usually don't get a tax break on it.
Precisely.
It is when you're covering yourself that you usually get the tax break. But that's what the government wants to incentivize.
Right. Milan, what about the claim process? People feel that it's going to be cumbersome. They're probably not going to get the claim that they're looking at. So they're apprehensive about taking an insurance cover like this.
Sure. So I think, it not necessarily only related to home insurance. I think insurance is a subject overall. The big reason why we see a lot of customer dissonance is largely due to education. Most of the customers end up taking a policy, but probably have not even taken the effort to understand what that policy were to really sort of cover them for. Simple things like, when we did some couple of research, we also figured out motor insurance, which is mandatory, almost 30% of the customers did not know which insurance company they've insured with. Right, because some intermediary would have come to his house, got his signatures done. He's not gone through terms and conditions. He's paid the premium, and that's all it is. It's only when the moment of truth happens, a claims were to happen, at that point in time you understand, oh, I'm covered
When the
by
arguments
this
start.
XYZ insurance company.
Right.
But in case of home, which is a relatively new product, I think education is at a very, very grassroots level. It's not even, I think there's not enough work being done by the insurance fraternity, and consumers have not taken the effort for it. So I think that's where the root cause comes in from. So one of the things I think I would recommend that the consumers really focus on, one is to know the terms and condition, to understand, who you are, what's your profile, and what is that you really need. Are you a owner? Are you a tenant? Are you an owner who have let out the property? Because for everything there's a solution available, right? And the home insurance will cater to different needs.
That's an important point.
Absolutely. So basis which you were to then get the sufficient coverage. So I think not leave it completely to the intermediary, but be more informed. The other important element is an element of sum insured. So what is it that you are insuring a house for? Like Yashish mentioned clearly is that, what we pay for is a cost of reconstruction, right? Now, how do you define cost of reconstruction? Now, the beauty of a home insurance product is that it can be long term. So you can take a 3-year policy, I mean, of course, an annual policy, a 3-year policy, a 5-year policy, and to the extent of 10 years. So assume you were to define the cost of reconstruction from a house today is 1,000 rupees a square feet, right? And it's a 2,000 square feet. So basically you arrive at sum insured. But understand, over the years, there is an escalation that comes in. So the tariff, in fact, the provision, it allows you for offering an escalation clause in there to the extent of 10%. So annually, your sum insured can grow. Right. Only if you're educated and you're aware of it, you can opt for it. And why this is fundamental, Arjun, is because there's a clause of underinsurance. Say assume 1,000 rupees, year 10 becomes 2,000 rupees cost of reconstruction per square feet. Right. Now, if you've taken only 1,000 rupees, you are half insured. So that's what you call. So even if you were to, your whole house would get gutted, right?
So that's the due diligence part where you actually sit down, take 5 minutes out and say, okay, this is how I'm going to plan this part.
But at that point in time, you'll get paid only half the amount. But there'll be a customer dissonance because he did not really pay the heed to the fact that you could have built in an escalation clause.
Right.
So that's a very important part. So it is know your term, know your policy, take that time out because you're investing into something which is very, very crucial and critical for your life. And I think that's where probably a lot of problems and claims related issues get addressed.
Right. Yashish, what about the types of plans which are available in the market? Can you quickly go through that?
See, every general insurance company in the market, and there are now 25, 26 companies, everybody has a home insurance plan. The type of plans go from basic, as I said, a basic structure cover to structure and contents cover to declared contents cover to some additional benefits. Some of them will even cover things like terrorism and violent arson and various kind of things. So you got to choose a bit. And clearly there are about 30 options available. The cost, as I mentioned, is for every lakh of cover you'll pay roughly about 50 rupees. It could be a little less, little more.
Thanks, Yashish. Thanks, Milind, for joining us on this show. That's all the time that we have on this episode of Policy Bazaar. But in the previous episode, we asked you what is the lock-in period for investing in ULIPs. Now, the correct answer is 5 years. That's 5 years with an option to withdraw. And congratulations to Sova Rani. You won a gift voucher of rupees 1,000. And it's now time for you to take our weekly quiz and answer this very simple question and win some exciting rewards. And the question is, does home insurance impact tax saving? Well, that's all that we have for you, but you can tweet us at Twitter at policybazaar_in, email us at queries@policybazaar.com. And goodbye. We'll see you next time with another episode of Policy Bazaar.